You think you need thousands of dollars to start investing, right? That one single belief keeps most people glued to the sidelines, totally paralyzed, while their hard-earned money slowly and silently loses value every single day. But what if I told you that in the next few minutes, I can show you how to bust that myth wide open? I'm going to reveal the simple, long-term strategy that lets you start building real wealth with less money than you probably spend on coffee this week. This is not a get-rich-quick scheme. This is the simplest, most proven way to turn your spare change into a powerful engine for massive, long-term growth. Stay with me because by the end of this, you won't just think you can be an investor, you will be one. The why, the hidden cost of doing nothing. Let's get one thing straight. The biggest risk isn't investing. The biggest risk is not investing. Right now, a silent thief called inflation is eating away at the spending power of the money you have in the bank. That $100 bill in your checking account will buy you less and less with each passing year. The only way to fight back, the only way to get ahead, is to make your money work for you. And that happens through what some have called the eighth wonder of the world, compound interest. Imagine your money is a tiny snowball at the top of a really long hill. When you invest it, it starts to roll. It picks up a little snow, that's your return. But then the magic happens. The next year, you're not just earning a return on your original investment. You're earning a return on your investment, plus the snow it already collected. Your interest starts earning its own interest. Let's make it real. If you start investing just $100 a month, and we assume a historical average annual return of around 7%, after 10 years you'd have over $16,000 from only $12,000 of your own money. Now that return isn't guaranteed, as past performance doesn't predict future results. But after 30 years, that same $100 a month could grow to over $168,000. The person who starts investing small amounts in their 20s will almost always end up with more than someone who starts investing larger amounts in their 40s. You cannot get back lost time. That's why we're starting today. The 2 golden rules before you start. Now, before you get all excited and throw every spare dollar into the market, we need to build a strong foundation. This is what separates smart investors from gamblers. There are 2 non-negotiable rules you must follow before you invest a single dollar. First, you've got to pay off any high-interest debt. I'm talking about credit card debt, payday loans, anything with an interest rate of 8% or higher. The stock market's historical average return is around 9–10%, but that's not a guarantee. A 22% interest rate on your credit card is a guarantee. You'll get a guaranteed 22% return just by paying that off. No investment can consistently beat that, so attack that debt with intensity first. Second, you need an emergency fund. This is 3 to 6 months of your essential living expenses stashed away in a separate, high-yield savings account. This is your financial firewall. It protects you from having to sell your investments at the absolute worst possible time, like during a market crash, just to cover an unexpected car repair or medical bill. An emergency fund gives you the peace of mind to invest for the long term, knowing your immediate needs are covered. Don't skip this step. If this is starting to make sense and you're realizing how powerful this can be, go ahead and hit that subscribe button. I break down money, investing, and wealth building in the simplest way possible every single week. So let's continue the 5-step blueprint to your first investment. All right, you've tackled your high-interest debt and your emergency fund is in place. Now it's time to actually become an investor. This is the 5-step blueprint that will get you in the game. It's dead simple, and you can do it in less than an hour. Step 1, choose your tool, the brokerage. First up, you need to open an investment account with an online broker. Forget the old image of needing a fancy suit and a Wall Street contact. Today, you can do this from your phone in your pajamas. You're looking for a beginner-friendly platform with no account minimums and 0 commission fees for trades. Excellent, reputable options for beginners in 2026 include Fidelity, Charles Schwab, and Vanguard. They're industry giants and are great for long-term investors. Mobile-first apps like Robinhood and SoFi are also incredibly popular because they make the process extremely simple and support something that is a total game-changer for us: fractional shares. Fractional shares mean you don't have to buy a whole share of a company. If one share costs $500, you can buy just $5 worth of it. This is the key that unlocks investing for everyone. You can literally start with a few dollars. Step 2. Pick your account, the tax-free secret weapon. When you open your account, you'll see a few options. The main two are a standard brokerage account, which is taxable, and a tax-advantaged retirement account, like a Roth IRA. Think of it this way: a standard account is great, but a Roth IRA is like a secret weapon. With a Roth IRA, you invest money that you've already paid taxes on. The magic is that all your future growth and withdrawals in retirement are completely, 100% tax-free. All that compound interest we talked about, the government can't touch it. If you're investing for retirement, opening a Roth IRA is one of the smartest financial decisions you will ever make. Step 3. What to actually buy, the don't pick stocks strategy. This is the step where most beginners get paralyzed. They think they need to be a stock-picking genius like Warren Buffett. You don't. In fact, you shouldn't even try. Long-term studies consistently show that the vast majority of professional, full-time fund managers fail to beat the overall market. So what do? We just buy the whole market. We do this by investing in something called a low-cost, broad market index fund, or an ETF, which stands for exchange-traded fund. Think of it like this: instead of trying to find that one single needle in a giant haystack, you just buy the entire haystack. A perfect example is an S&P 500 index fund. By buying one share, or even a fractional share, of an S&P 500 ETF, you are instantly invested in 500 of the largest, most successful companies in the US. You get instant diversification. Some popular low-cost S&P 500 ETFs are VOO from Vanguard, IVV from iShares, and SPY from State Street. They all do basically the same thing and have incredibly low fees, often as low as 0.03%. That means you only pay $3 a year for every $10,000 you have invested. This is the core of our simple strategy. Step 4. Make your first move, the $5 investment. You've got your account. You know what you want to buy. Now it's time to pull the trigger. Log into your new brokerage app. Search for the ticker symbol of the index fund you chose, like VOO. Click Trade or Buy. Instead of entering a number of shares, pick the option to buy in dollars. Now type in $5, confirm the trade, and that's it. It's done. You did it. You are officially an investor. You own a small slice of 500 of the biggest companies in America. See, it wasn't complicated. It didn't require a pile of cash. It just required you to take that first small step. If you like simple, no-stress investing strategies like this and want to keep learning how to build real wealth step by step, go ahead and hit that subscribe button. And now, let's keep going, because this next step is where everything starts to come together. Step 5. Set it and forget it. The automation habit, the final and most critical step, is to put this whole thing on autopilot. The secret to building wealth isn't about timing the market. It's about consistency. Every single brokerage platform allows you to set up automatic, recurring investments. Log back into your account and find the option for automatic transfers, or recurring investments. Set it up to automatically pull a certain amount from your checking account every week or every month and invest it straight into that S&P 500 index fund. It can be $5 a week. It can be $100 a month. The amount doesn't matter as much as building the habit. This ensures you invest consistently, whether the market is up or down, a strategy called dollar cost averaging. This takes emotion out of the equation and turns building wealth into a background habit, just like brushing your teeth. The 3 emotional demons you must conquer. Your system is now in place. But the journey isn't over. You're going to face 3 emotional demons that have destroyed more wealth than any market crash in history. It's a classic story, and you don't want to be the main character. Tons of investors regret making impulsive, emotional decisions. The first demon is fear. When the market crashes and headlines are screaming about a recession, your gut will tell you to sell everything. This is called panic selling, but history shows that markets always recover. Investors who panicked and sold during the 2020 crash missed out on one of the fastest recoveries in history, while those who held on or kept buying saw their portfolios soar. Your automated system is your shield against fear. Trust the plan. The second demon is greed, better known as FOMO, the fear of missing out. This is when you see some random stock or cryptocurrency going to the moon, and you feel an irresistible urge to jump in before you miss out. This is how people end up buying high, right before the bubble pops. Remember, if you're hearing about it on the news, you're probably late to the party. Stick to your simple, diversified index fund. Ignore the hype. The third and final demon is impatience. You won't get rich in a week, or a month, or even a year. Investing is like growing a tree, not winning the lottery. It feels slow at first, but this is where compound interest works its magic over decades, not days. Constantly checking your portfolio and trying to trade in and out will only wreck your returns and crank up your stress. Let your automated system do its job, and that's it. That is the easiest, most effective way to start investing today. It wasn't about having thousands of dollars. It wasn't about a complex strategy or a hot stock tip. It was about paying off your expensive debt, building a safety net, choosing a simple tool, buying the whole market with a low-cost index fund. And most importantly, automating the whole process so you stay consistent. You are an investor now. Let that sink in. You've taken the single most important step toward building a wealthier future. The key from here on out is simple: be patient and stay the course. Let time and compounding do the heavy lifting for you. If this video helped you break through the fear and confusion, do me a favor and hit that subscribe button for more simple, no-nonsense finance tips. And now for my question of the day. What is the number one thing that has been holding you back from starting your investing journey? Let me know in the comments below. Let's talk about it. Thanks for watching, and here's to your future.